anybody that doesn't know anything about Waterloo Region, here's the guts right here, Adam, right? We have a load of students. I don't even know if I can say that on this channel, but we have a buttload of students, brother. 75,000 students. We got a lot of aerospace technology. We got a lot of cars. We got a lot of transportation because we got some of the big boys coming in. We got your Googles. You want to get all fancy. We got your Spotify. We got your Vidyard. Like, you know, some of the fancier ones, but there's a lot of like small to medium-sized businesses that are cranking out big time numbers. Couple tech companies we're hearing whispers that are coming out of Waterloo Region that are going to be going public this year. Where I see value in Waterloo Region, so for here in Waterloo Region, premium locations, like we just took a $200,000 to $300,000 haircut. If you can stomach the interest rate environment right now, prices are $200,000 to $300,000 cheaper than they were 2 years ago. Just think about that in a 5 to 10 to 20 year window.
Welcome back to the Canadian Real Estate Channel. I'm your host, Adam J.D. Martin, and today I have Zack from Phipps Brittain Real Estate, and we're going to be hitting you guys with some information coming right off the end of 2023 and talking about more in the Kitchener market, what type of opportunities we have for you there. So, Zack, what's going on today?
Oh, brother, slow end to 2023. I don't know about you. It was pretty quiet until basically like Christmas to New Year's. I had buyers coming out of nowhere, looking at properties, making some offers. So was a slow month in December, but January getting spicy already, my friend. So I thought I'd share a little bit more on where the market is now real quick compared to kind of last year and what we expected. We're almost at the end of January, but month-end data is not out. So I figured I'd share a couple tidbits, kind of useful data points for anybody that's either active right now or considering kind of jumping in the market as a buyer, seller, or investor in the next 30 days. I wanted to pull up a quick note here on just the volume of deals being done. So typically on a normal year, there's basically between 8,000 to 10,000 transactions in all of Waterloo Region. That's on market MLS transactions, right? So, last year we were about 6,500. So you're taking anywhere from 2,000 to 3,000, 3,500 deals out of the market in a given year. It's a serious haircut. So there's significantly less deals being transacted, period. The number of new listings straight up down 14% last year. And if you think about it, and this is kind of where I wanted to start a little bit more of an open discussion. I think investors out there, buyers, sellers, you guys aren't idiots. People are out there considering what's really going on. Prices are depressed and they hadn't really hit a bottom yet in 23. So a lot of buyers, whether they were qualified, ready, or motivated or not, they're thinking, well, I'm going to be less motivated to jump into the market if I think it's going to continue to go down. And I don't think the interest rate environment is going to improve. So straight up, less people were trying to sell as well because they think, okay, well, if we're on the way down or prices are depressed, I can't get the price I need. I don't need to sell right now. Well, they're going to be more willing to stay for another year or 2, 5 years because the cost, the resistance, and the market isn't really there for them. So we just saw less people even trying to list, let alone selling, period. And that kind of translated into really flat median sale price. We were about $1,000 less median sale price in Waterloo Region in 2023 than we did in 22, virtually the exact same price, right? Now, here's kind of, we've had discussions on this before, and here's kind of where I'd love some of your opinion was months of inventory. Like we're still super low in inventory, which wouldn't concern me if we didn't see fewer new units being built across the board. Southern Ontario has been crushed by it, other parts in Canada as well, but straight up developers and builders are being like, yeah, we're not building as much. There's less new housing starts.
Yeah, and I mean, that makes sense though, right? Like if there's not really a price incentive to build and if you don't think that it's a guarantee you can sell out your new development, like, man, that's a lot of risk to take on. Why not just sit on your capital or otherwise deploy it some other way from a builder and developer perspective as well? So, and again, I think we've discussed this too before, but it's worth bringing up. Like, we've made some changes in terms of regulation and trying to make things a bit easier, but I don't think it's been life-changing yet for the developers. Like, it's not like all of a sudden there's a lot less regulatory issues to building in Ontario. So, yeah, yeah, like I perfectly understand it. And I think you made a great point there about sellers wanting to stay. Like if you made a good investment in 2023, I don't see why you'd be wanting to exit now if the numbers didn't make a whole lot of sense when you could hold, right? Like if it's a cash flowing investment or something like that, like if you don't have to sell right now, you know, I understand the people that are staying.
100%. And it's just like, I think it takes kind of say a more painful experience and a painful market for people to really realize the underlying trends and where it's going. And like, you get a lot of buzzwords, and I think the news is really fear mongering, especially in real estate. It's a very, you know, doom or gloom, or everything's puppy dogs and rainbows. There's not a whole lot of really in between. The reality is, though, Southern Ontario, specifically Waterloo Region, they consistently haven't been able to build enough. We have more people coming here, so our population's growing, but we're building less units and there's less properties being sold. So if there's less being built, there's less being sold, but there's more people coming. It means there's more people fighting for a smaller amount of things. More people fighting for a smaller amount of things mean those things become more rare or more valuable and will appreciate in value over time. Just broad strokes, broad strokes. So I have a real hard time not believing in the long term of real estate, specifically in Southern Ontario. I'm gonna pump Waterloo Regions, my home market. This is where I sell. This is where I make most of my money. This is where a lot of my investments are. It's in my best interest. I like money. I want to make more money. It's in my best interest if Kitchener continues to do well. But I just see all of the underlying trends just pointing to long-term appreciation in rental rates, asset values, right? And I just want everybody, if you are considering either getting into the market as an investment property or your first property, and that's a part of what you want in your life and as a part of your, wealth creation strategy, whether it's your retirement strategy or just a piece of it, look at doing something sooner rather than later. And make sure you get good local advice. Like right now, this is part of the reason why people come to the channel is they want, to hear from the local experts. But just like I got that feeling now that I got kind of my first or second year in the business where we really started to see the market tick up when interest rates were still low. You're just like, I got some friends that kind of missed that boat, had some clients decide to go on the sidelines for, whatever reason it is. And that happens, but just give it a serious consideration, right? So, just last but not least, just back to practicality for our market, our properties are selling in about a month, give or take. If you're at $1 million plus, expect it to take closer to 2 months. If you're freehold under $1 million, 30 days or less, almost guaranteed. If you're a one-bedroom condo in one of the new developments that have come to market and has 10 other listings that are the exact same as yours on the market, all right, unless you're willing to take, 10, 15% less than all the competition, you're going to be on the market for a couple months, right? And that kind of goes to our spicy ratio as well, the list to sale price ratio. Back to normal for now, Adam, right? Probably between 2019 and 21, we were on average 105 to 115% of the listing price. Every property is selling over asking price. Well, we're starting to see more consistent trends in different segments of the market, which is bringing the overall average and the median data kind of back to normal. Back to normal as in like your 10-year averages. So you're about 98, 99% of the list to sale price ratio in Waterloo Region right now. Again, if you're in the $1 million plus detached market, it's a little different than if you're, under 800 or under 700K freehold, or like I said, 1 or 2 bedroom condos. Those markets kind of have their own very clearly defined trends. So if you guys are watching this and you're saying, hey, Zach, I'm a condo investor, or hey, I want to move my semi-detached, or hey, I'm thinking about moving up to, a 2-story or whatever. Those market segments are much more clearly defined, whereas 2018, 19, 20, 21, all the markets are kind of moving in the exact same. So if you guys want more, segment specific data, we do check all that stuff every single month. Send me a message or leave us a comment here. Be happy to answer your questions on those.
I was really happy to get that update from you on our market update video, where we actually talked about like that sale to listing price coming back to normal, because like as a real estate investor myself, like I would much rather have the common sense approach to like not having to think that like there's a price delta of like 20 or 30% compared to what I'm looking at. Because the problem is it completely skews how you start searching for properties. And I know that there's different types of investors as well. So I'd love to talk to you about that. But, for a new investor or somebody just getting started out in the market, it's very confusing when you set up a search for, say, like whatever, 400 to 600,000, and you start looking at properties where you're like, oh man, this actually fits like all of my criteria. And then that $600,000 house is actually an $800,000 house in disguise. I know it's very hard for people to wrap their head around that at the start, and I don't think it's exactly fair. So I actually am a huge advocate of getting that ratio back down to like a sensible position,
Something
so you know what
normal.
to search.
Right. And so I know you did a live where you were scouring the MLS and you pulled up a proper. I jumped in there last week actually, and I think the video's on the channel now. But it was like a detached in Cambridge, and even made a comment. I was like making dinner or something. I forget. I was watching and making some comments and stuff, and I actually pulled up the listing there the other day, and it sold over asking price because we were looking at it, and you're like, yeah, it could make sense if it sells around asking price, but I don't know the pulse of the market. Like maybe all these are selling 100K over asking. Who knows? And it makes it so hard. So like if you guys are first time buyers or you're new to our market or you haven't done business in 5, 10 years and you don't really know what's going on, like please, like having a list to sale price ratio under 100% is just so much more healthy and predictable for buyers, sellers, and investors. Consistency is good. Right? Consistency is good, right? I'd like a little bit. So before we get into the rest of the video, I want to cover like I got 3 types of deals for like different types of investors. We've worked with a lot of newer investors that are, maybe picking up their very first property or their very first investment property. And there are a lot of different options for those type of investors in Waterloo Region. Into the intermediate investors, though, we have a few more types of deals, but it's more limited to like 2 or 3 types of deals that kind of make sense for anybody that wants projects kind of under that 2 million price point. And then we'll go over what types of deals, kind of that 2 million plus, those bigger investors could really actually find some value in here in Waterloo Region. But for those of you that are looking for more consistent updates on listings, on data, on off-market properties, as an investor, we do our investor hot list email every single week. It was quiet over the holidays because honestly, there was garbage listings to send you guys. A couple flips, a couple smaller deals, but a lot of the listings got taken off and relisted here in January. A lot of the multi-unit listings, their contracts probably expired in the new year, or the sellers decided to take it off during the holidays because they couldn't be bothered, or they realized they were grossly overpriced and they're never going to sell it for the price that they want. So they're going to sit on the sidelines for a little bit. We cover stuff like that and more in the investor hot list. There's a link in the description, phipsbrittainrealestate.com/contact. Hit the investor tab. You want to hop on a call with me, leave me a note to hop on a call. Otherwise, you get on our email list every single week. You get the goods from yours truly. So, quick hit. Anybody that doesn't know anything about Waterloo Region, here's the guts right here, Adam, right? A lot of new people on the channel this year. They're going to be looking at investing in real estate. They're looking to educate themselves on what they need to know, where they want to go. Waterloo Region. This is it right here. We have a shitload of students. I don't even know if I can say that on this channel, but we have a buttload of students, brother. 75,000 students. If you looked at University of Waterloo, it's a city in its own. There's like 50,000 people on Waterloo Region or on the University of Waterloo's campus at any given time. It's insane, right? And for Canada, that's huge. If there's people from the States or internationally that are watching this, 50,000 for a university in Canada is freaking huge, guys. Like that's massive, right? Now, Kitchener, Waterloo, and Cambridge, we all grew into each other. So if I'm saying things like Kitchener, or if I'm like here in Waterloo Region, generally speaking, I mean Waterloo Region as a whole. Kitchener, Waterloo, and Cambridge are our big cities, guys. Cambridge is the closest to the 401 in the GTA. Then in the 401 goes through Kitchener, and then Waterloo is the furthest away. Google Maps is your friend. Take a peek, boys and girls. And then what's here? So you're a Southern Ontario guy, right, Adam? You grew up in Southern Ontario? So a lot of Southern Ontario, traditionally manufacturing and agriculture, 50 years ago, 100 years ago, all manufacturing and agriculture, right? Still some manufacturing here. A little bit more high tech though. So we got a lot of aerospace technology. We got a lot of cars. We got a lot of transportation because we're 401 Southern Ontario, right? And then lots of education, lots of financial services, lots of tech and research, right? Pretty much what you guys think is here, you're pretty accurate, right? We got some of the big boys coming in. We got your Googles. You want to get all fancy. We got your Spotify. We got your Vidyard, like, some of the fancier ones. But there's a lot of like small to medium-sized businesses that are cranking out big time numbers. Couple tech companies, we're hearing whispers that are coming out of Waterloo Region that are going to be going public this year. So like Waterloo Region has finally found a way to retain all those super smart kids that are going to University of Waterloo, kind of keep them here. There's enough for them to grow here. So if you guys have more information, we've done lots of presentations on this. You can check out the past videos. But for the purpose of this, I want to jump into like, hey, Adam, if you're a newer investor or if you're a newer investor to Waterloo Region and you want to start smaller, here's a couple different types of deals that I think can make sense for, generally speaking, what I would consider a newer investor. And I actually made a comment on Corey McKinnon. He's been featured on the Canadian Real Estate Channel here before. He hosted a video there last year. I bumped into him at an event, and he ended up posting something about house hacking last week on his social media, and I made a comment like, "House hacking's not dead. Like, don't sleep on this, right? Like, I know you've done stuff like that too, Adam,
I'm
right?
house
Like,
hacking right now. You got to.
right? Get ahead, guys. You're just sharing something in exchange for money, and you're sharing something that you wouldn't have used otherwise. Like, think about that. You don't need a whole house. Listen, if you want to go buy your first house and you're scraping by and you're going to go buy a beautiful brand new single family home and you're going to be house poor, good. That's good for you. That's not me. That's not me. I put every dime into my very first property and it was a house hack. Piece of junk, had to fix up and clean up so I could rent out part of the property to make some money and live on the cheap. That's
Yeah,
house hack.
this is a fiveplex, and I live here for free, right? I mean, it's the best thing you could ever do. That's like 30 to 40% of the average Canadian's expense is their transportation and shelter cost, right?
Nothing
That's
beats
like
free,
all your
Adam.
money.
Guys, and like this is coming, so like personally, I'm about to put a new mortgage on my single family primary resident, and it's killing the investor inside of me. It's just killing me. It's killing me because I'm like, oh, I could still live in my duplex, or I could move into my triplex and live on the cheap. Listen, I got a family now. I'm in a better financial position. It made sense. All these other, but like for your first property, guys, house hacking. Go pick up a place 600 to 700K, and you can be making thousands a month on this. You can rent the rooms. If it's nice enough as is, rent the rooms out to your buddies or your colleagues, or find a mature student or find another individual that, has a similar schedule as you, whatever. There's so many people that need a decent place to rent that don't have a crazy landlord. You can get a good tenant in there, good credit, making good money, and you can be making extra money. Okay. Rent the rooms. If you can't rent the rooms, renovate. So the lower level or the upper level, it's a completely separate unit, right? And so what I like to do, Adam, is I like to think of options with my investments. Okay. So you guys have enough money to buy a freehold property. Great. Go buy something that you can rent out some extra rooms. Great. If you don't want to do that, but you have extra space, convert it to a legal duplex. That's option number two. If you don't have the money to convert it to a legal duplex, then just save some money. Use the money that those people that are renting from you pay you, save that. And then once you have enough, pay a contractor or do the work yourself to buy the materials and go do it. So I like the house hack to a duplex conversion. If you don't want a house hack and you want that completely separate living space, maybe you work from home, maybe you need the home office, maybe you got a partner, you got kids, you want a little bit more privacy, boom, jump right to a duplex conversion. You can buy detached homes, low 600s that you can convert into legal duplexes. Fantastic first investment property. You can live on the cheap. You can build equity. You can do an instant value lift because you're taking a single family home, making it a brand new 2-unit property. So in a pinch, you got to move for work, family, you lose your job, whatever, something comes up, you've built in a little bit of that kind of wiggle room, that forced appreciation, so you can sell it and still make a little bit of a profit. And if you guys want to jump right into a decent sized project, go convert a single family home into a duplex and then throw an ADU in the back. We just ran the numbers for these at current financing with the current prices of how much it would cost to do that and how much it would cost to acquire the property. If you bought a single family home and you financed everything, you're basically making 100 grand value lift right off the bat to do all the work. It's going to take you 3 to 6 months. You're going to take a single family home, convert it to a legal duplex with an ADU. But after you're done, your ARV, which is conservative because we just got one of ours refied, you're going to make about 100 grand just to do all that work. I don't know about you, but most average Canadians aren't going to go out and make 100 grand in 6 months. It's not a lot of people are doing that. So if you're thinking about first property, I would go house hack. I would go house hack into a duplex conversion, or I'd go duplex conversion into an ADU. The numbers still check out in our market with the current financing conditions. They are very decent options, especially if you're willing to live in one of the units. Even better.
Yeah, and adding value like that to a property is fantastic. And it's also a great note as well to newer investors who already have the property, right? Like a lot of that cost goes into the initial purchase of the land, the location, right? The neighborhood.
Yeah.
And of course the house that comes with it. But adding an additional dwelling unit to it, like you've just cut out that step, right? So rather than necessarily having to go look at acquiring a new property that has all those features again, it's much easier to just add additional value to that existing property. So I love that.
You can even use the equity from converting a single family home into a legal duplex. You'll create some equity. The duplex will be worth more than what the single family home is, guys. You can use that equity to finance or to build your ADU. So if people are thinking, hey, Zach, well, that's great. I have enough money to go buy the house. Then what? Okay, buy the house, rent it out, save up the money from your job, save up the money from rental income, convert it into a legal duplex. Once it's a legal duplex, you're going to have extra equity in the property because what you've put in is worth less than how much the home is worth now. You've added value. Good for you. Use that value lift. Line of credit, refinance, equity take, something like you can use these things and you can finance everything. Like I'm not saying go and take risky debt if you don't have experience, you don't have a plan. That's not what I'm saying. This is not financial advice, guys, but I'm just saying there are ways to do it where you're not just continually taking hundreds of thousands of dollars out of your pocket. Guys, I get it. Tens of thousands of dollars don't grow on trees for most people. So, let's think about this. So quick example, bungalow right here, Boomba. This is a classic example of bungalows that you find in Waterloo Region. Lots of these in Kitchener. Brick stone front, a little bit of siding, 1,000, maybe up to 1,100 square feet. That means the basement is going to be the same. So boom, I did a quick little drawing right here. That green line is supposed to separate the garage space, but you have a rec room, utility room, and maybe a storage room or maybe a garage. Guys, most of this can be converted into legal living space. And since you guys have a separate entrance or you got a garage door or you got a walk up or a walkout, you don't have to go and cutting major holes and digging up, parts of your basement to get into the unit. There we go. So I just want to really highlight here, like, this is what most people see as a basement. If you have a girlfriend, a boyfriend, maybe one or two kids, you can go live in 1,000 square foot, 3-bedroom apartment. You're never going to use your storage room. You're going to use your laundry room twice or 3 times a week. You don't need all this extra space, guys. You could be converting this for less than 100 grand and then rent it out for more than $2,000 a month. The numbers work, Adam.
Yeah, and by the way, there's a lot of strategies today and a lot of like really interesting materials that help with all of those objections that you just had in your mind about sound transfer, about smells, about whatever it is that you're thinking about as an issue. Like those objections are handled fairly easily these days by all of the different products that have been developed to help us have higher density living situations, right? Like sound it doesn't have to be an issue. Now it can add some cost to properly sound insulate everything, but like, man, you don't need to, like, a lot of those objections are kind of baseless, and the value that you could extract out of the property is worth so much that it's worth looking into, at least as an option, right?
100%. And I think it's just like, if I wanted to hammer home any point, it's just like, don't underestimate the value of your first property. I turned my first property into 13 units in 2 years. And I didn't even do anything special. Sure, I got a little shit lucky that the market was going up like crazy while I was getting into my first properties. But hell, guys, I'd rather be lucky than good any day of the week.
Yeah.
And right, the more I invest, the luckier I get. I don't know, right? So I just want to really push people to look at this, whether it's Kitchener, another market, I don't care. I just think if you guys are an investor or if you're potentially a home buyer that has that investor mindset and wants to use it as a tool financially, do not sleep on your first deal, okay? We won't go into the layouts. I could talk about how to do layouts in bungalows or how to convert duplexes, but basically if there's a property in Waterloo Region and you're thinking about converting into a duplex, I'm pretty sure I could pull it up on my system and tell you how expensive it's going to be, plus minus 5 to 10%, and if it's even going to be worth your time or possible, just by looking at it. Depending on the neighbor, like even if you just tell me the neighborhood, we've looked at so many of these properties over the last 7 years in business. We've done so many of them in so many different locations that I can tell you pretty quickly what type of price point you need to be purchasing those properties at, how much they're going to cost, and what the ARV is going to be. So if you're running numbers on locations here in Waterloo Region, comparing them to other locations or other deals, shoot me a DM. Happy to do some quick numbers with you. Now, boom, the step up. So for these guys, I'm thinking, people who have a couple of deals under their belt, or maybe they got a primary residence and they're thinking about, kind of starting into some small to medium-sized deals in their portfolio, and a duplex conversion with an ADU. Great option if you have the capital. Great option if you're looking for 3 units and having 2 of them not subject to current rent control laws. That's part of the reason why we still really love those deals. You can buy those for 600 to 700K. You're converting them into a legal duplex. Then you rent the duplex out to get some cash flow coming in. And then we're going to go put the ADU in the back, and then you can refi the whole thing and you're still making a few $100 a month. Now, depending on how much cash you're putting down, depending on your financing situation, depending on how much you're renting out for. Generally speaking, though, if you're purchasing between 600 to 700K and you're not blowing your budget on the renovations for the duplex or the ADU, numbers are still decent. Big reason why we do love those, like I said, Adam, is the no rent control. When you convert a legal duplex, friendly reminder here, folks, when you convert a legal duplex, your upper main floor, that is subject to standard rent control. You can only do the maximum allowable increases. But my lower unit and the ADU in the back, brand new units. So those are not subject to rent control. So I get a little bit more control back as a landlord, and I get to make sure that those units maintain market rents. I've heard some reports, market rents are expected to go up anywhere between 5 and 12%, depending on where you're at in Southern Ontario this year. I don't expect 12% here in Kitchener and Waterloo, but I expect it to be more than the maximum allowable requirements outlined by our governing body. So I'd expect it to go more than about 1.5 or 2%. I don't know about you, but that's what I'm working with.
Yeah, well,
So
that's
this
really
gives you,
fantastic if you add a unit to a building that's had a longer term tenant, right? So you can really
yeah,
level out that building where if you've been raising rent, whatever, 2% for the last 10 years or something like that on a rental property, the ability to add a new unit and have it really smooth out your cash flow on that building and add a ton of value for refinancing purposes or whatever else, or even just simply for cash flow, like that's a
yeah.
fantastic opportunity.
And another thing, another opportunity to create a win-win. Listen, you got a single family home that somebody's been renting for a while. Come to them. Hey, I'm planning on building an ADU in the backyard. Do you want first dibs at renting that? Maybe they love the location, but they want newer space. Well, they can't live through a renovation. That's a good way. Then maybe you can come to an agreement where they're paying a little bit more rent, and then you get somebody else in the home and they're paying closer to market rent, like just more opportunity. And if you guys have questions on financing, I know Adam, a lot of people have come to us and be like, well, how do you finance them? Who will finance them? There are lenders that will finance ADUs. They will appraise ADUs as legal duplexes or legal triplexes and use those as comparable sales. They'll use market rents. We just had one appraised at 1.2 million, a duplex with a ADU in the backyard, 1.2 million. So you guys can, if you're running your numbers, expect something around there, assuming that you have decent units. But again, I'm not a appraiser. I'm not a mortgage broker. Don't hold me accountable for that. I think the next couple deals I wanted to talk about were smaller multi-unit burrs. So basically, duplex plus ADUs and smaller multi-unit burrs is how I built my portfolio. Duplex, triplex, fourplex, adding additional units on those types of properties. That's how I built my portfolio because I could get sexy, juicy residential A financing. I could qualify for it based on my income. I made good income. I can use my rental income to help support that. So if you only have 1, 2, 3 properties under your belt, it's still a great option for you to take advantage of the nice financing that you can get in the residential A space. But the small multi-unit burrs, where you get kind of sneaky good deals is if you can get vacancies or if you can get prices that represent the rents that the property is getting. And what I'm getting at here, Adam, is like most of Southern Ontario, a lot of multi-units are being sold at pretty high prices in exchange for the rents they're getting because those buildings are very rare. And if people want multi-units under a few million, 3 or 4 or 5 unit properties in most major cities in Southern Ontario is all they can afford. And so I like those if you're willing to solve the low rental income problem, or if you are willing to house hack it, right? If you want to buy a triplex and live in it with your family or extended family and friends, opportunity for you there. But one thing that I really like about the smaller multi-unit burrs is most of them in Waterloo Region are built on big lots. And I like big lots. Adam, I especially like that most of these multi-units, triplexes and fourplexes, are built in downtown or midtown locations on big lots, which means those lots will continue to appreciate and those style of properties will continue to appreciate very well. And they also have easy opportunity to add value by adding units either in the existing square footage footprint, or new units off the back and the side. So small multi-unit burrs, get a triplex, get a fourplex in a good location on a big lot with extra parking, turn over the units or improve them to keep your current tenants paying slightly higher. Add things to them to add value. Add laundry, add new mechanical systems, update your electrical, redo kitchens, bathrooms, lipstick it, create new parking, right? There's lots of stuff that you can do with not crazy high spend to dramatically improve how that asset will perform. And then it can just turn into a multi-unit hold, right? A lot of the ones that we've bird, if we could sell it for tomorrow's price, maybe we will. But we could refinance most, if not all, of our money out in less than 2 years. I'm going to like those types of deals too. So those will turn into our multi-unit holds. And I had an example for you. This one's a purpose-built 3-unit property that the previous owner actually put a legal 4th unit in the lower level. So they had a small space in the basement that they could use to put a 3rd legal unit in or a 4th legal unit, and they did. Boom, that's one example of a value add. The reason why I wanted to pull this one up is this. 53 frontage, 131 deep. Now, as you can see, there is a detached structure at the back, Previous owner actually put a triple car detached garage back there because fourth units weren't allowed on this type of property. But 4 units on residential lots here in Ontario, let's go. So what we could do is you could create a detached fourth unit there, or you could go through a zoning change and get more units to do an addition off the side or the back. With these types of properties, what you're doing is you're buying multi-unit property that'll carry or make you a little bit of money every month. You know, you're buying your triplex, your fourplex, your renters are bringing your cash to carry your mortgage and pay you a little bit of money every month. And what you can do is you can then start to discover, what exactly can I do to max out the value of this property? Can I build 6 additional units? Can I just build an ADU? Are there things I can do with the existing footprint? This is a great way to step up from just a, hey, buy a single family home or buy a single family home, convert to 2 units, to, okay, how do I get more cash flow for the acquisition price? Or how do I add more value to a slightly bigger project? Listen, I don't expect you guys to go from duplex conversion up to, full on developing, neighborhoods or cities or, condo projects. But this is such a good segue for you to learn how to work with the city, how to work with multiple tenants, how to step into the true multifamily space where you have more than 1 or 2 renters that are helping you pay for your mortgage and cash flow. Really good step up properties are purpose built triplexes and fourplexes on big lots. We like those. We like those big time. Now, let's see. Next up, we got bigger deals. Okay. So in Waterloo Region, there's not a ton of multi-units. There are pockets of Kitchener, Waterloo, and Cambridge that have a lot of purpose-built multi-units, primarily kind of those 60s to 80s builds. In Canada, specifically in Southern Ontario, there was a huge boom of building for apartment buildings, low to mid-rise apartment buildings during this time period. So parts of Cambridge, parts of Kitchener, and parts of Waterloo, typically between the 60s and the 80s, have purpose-built kind of 8 to typically about 24 units, depending on the location. And most of those have had tenants in there for a long while. Some of the units have been turned over, but overall speaking, you're expecting the rents to be a little bit lower. So what we've noticed is 10 plus units, pretty good. Numbers are starting to look really, we could make something work here. But if you're able to find 20 plus units, and this kind of goes even beyond Waterloo Region, and these are the types of deals that we're typically looking for now, Adam, is those 20 plus unit buildings pretty much anywhere just look a little bit sexier. Your cap rates are nicer, right? Your cash on cash is a little bit better, right? Your cost per door starts to get a lot more attractive. The 10 plus, some of them, there's a couple deals that actually sold on market last year here in Waterloo Region that were pretty good, but the 20 plus units, that's where your numbers start to look a lot sexier. So if you're just straight up, buy those, get a new property manager in there or manage them yourself a lot better, update your common areas, make sure the parking's taken care of, add some units in the basement or off the back if you can. Whatever you could do with this little money in to improve the cash flow, better it is. For these deals, Adam, we're thinking, how do I improve? What's the most consistent, likely way for me to improve the rental income in the first 3 years or less? That's what I'm thinking about for these bigger deals, right? Now, in our market, what's going to be a lot more common is adding units to small to medium-sized multis. So if I'm taking a 4 to 8 unit building in Waterloo Region, it's going to be much more common for investors to buy those at a break even, maybe up a couple $100 a month, and then figure out how many units can I add to it. And so we've looked at a lot of deals like that. And generally what I'm seeing is any building that's about 6 units that I can add more than 4 units to, deal looks pretty good. Just on a straight up what my value lift is. A couple reasons why the deal looks good. One, the acquisition cost per door for 6 plus units is a lot nicer than say 3 units, right? If I buy a duplex for 800K, it's 400 units a deal. Well, I'm not paying 400K a unit for a 20 unit building or even a 6 unit building. I'm probably not going to do that. But what I can get with purpose built 6 units is big lots. And the big lots and the zoning for sixplexes can sometimes automatically allow me to immediately zone to put up an additional 6 units. Not a perfect case, just generally speaking, what I'm seeing, what our market has to offer. So what we like to look at is, okay, if I buy this sixplex, can I carry it as is? No tenant turnover, worst case scenario, these tenants stay, they keep paying, we're all cool. Okay, can I carry? Great. Well, I know I can probably add 2 units without blinking. Okay, that's okay. But where you really start to see the money is typically 4 to 6 plus units on a new building because those units are not rent controlled. I can get current market rents for them. And then boom, I can roll that financing. Either if I had to acquire it with a B lender or private lending, I can roll that into A financing or immediately roll it into CMHC, or I can use CMHC for the whole thing. And the numbers start looking way sexier then. So if you guys are looking into some of the bigger deals, anything above 10 units, worth a look in Waterloo Region right now. Anything above 20 units, definitely worth a look. And small to mid-sized multis that have big lots that you can add new units to, that's typically where we see a lot of value. The straight up just buy and hold A class, that's just not really available. Big boys, trusts, REITs, pensions, they're buying that. Waterloo Regions, I'm already big enough. Like the big boy stuff, it's getting gobbled up by the big boys. But the medium-sized stuff that you can add units to or that you can either turn over or manage better, lots of value for investors that are looking to get that. And last on this point, Adam, partner. Partner on bigger deals. Very rarely is some big dog going to come in with 10 million cash and just go do it all themselves. They typically have partners. We work with partners. My partner, Matt, is one of my partners. We bring different things to the table. When you're going in and you're taking down a 20-unit building, it's going to be very difficult for you to do everything by yourself. Even if you're a full-time investor like I am, right? All I do is work in real estate. I sell real estate, I invest in real estate full-time. It's all I freaking do. But I can't do everything by myself. So as a partner, I can rely on my partner, Matt or Kevin or myself for different parts of the deal. And we can just do that part of the deal really freaking well. You crush that part of the deal, you have your partners take care of the other parts of it for you, whether it's bringing money, managing the tenants, doing the physical labor, whatever it is. I just think people should really consider exploring that as an opportunity to really grow their portfolio. Because I think a lot of people that invest in real estate, Adam, they got good jobs, right? They're doing well, but you don't really have the capacity to deal with more than a handful of tenants on top of your life. I've even run into that. I was getting burnt out because I was managing our 30 units here in town, and I was selling real estate full time and starting a family. And you get one too many calls from tenants about stuff that's either needs to be dealt with immediately or that's not really a problem. And it's just like it's just too much. And I've even seen, I've even had times of it too. You're just like, man, real estate investing is a grind. And when you start dealing with projects and contractors and tenants, so don't underestimate looking at either partners for small, medium, or larger deals, or understanding where you think you can add the most value as an investor and focusing on that. I think that was a big thing that changed for me last year, was understanding where I could bring the most value as an investor to me and my team. And we made a big shift in our business. And I think a lot of investors really spent last year on the sidelines considering what their next move would be. I know we've had discussions on that. I've had lots of comments on the YouTube videos and just personal DMs, just exploring a lot of options instead of just, hey, Zach, I want to go this way. This makes a ton of sense. I think a lot of investors are making up their mind right now as to which direction the market's going to go.
Yeah, and I think specialization is always good. Like it's very difficult to be the best at the paperwork and the best at the construction and the best at acquiring the actual deals and finding them and the best at disposing of them and the best at managing the ongoing operations all at the same time. Like it's just hard to do all of that properly. So I love everything that we've talked about today because I've gone through the full spectrum as well of like buying that single family, house hacking that into getting into smaller multifamilies and adding units and adding bedrooms and adding value as much as you can. And then I transitioned as well into, like right now I'm house hacking. This is a 5-plex. So you can house hack at different levels as well if you want. And then I've also partnered on a 24 unit building where like I was like, oh, this is outside of my skill set. But these guys are going to be fantastic operators. And I just happen to have the capital from having done these smaller projects to get into this project as a partner. And I think that that's a perfectly normal transition and trajectory for investors that are watching the channel. And they're like, okay, I'm still looking for my first property. It's like, yep, but there's like a lot of different avenues to get to the point of doing bigger deals if that's what you're after. And it's really only limited by your creativity and your ability to network and find other people that are willing to have shared goals with you. So love the content, Zach. I really appreciate that.
Yeah, and I just think it's like, look, if you guys are on the channel, you're doing your research and you're exploring different markets, different types of deals and stuff, like, yeah, getting that first deal under your belt, you'll learn so much about where you fit in as an investor. Said it before, these are them soft desk hands, Adam. Your boy is not swinging the hammer. I'm not using the tools. Look, I used to do labor before I got into university. It was great, paid good money. I am not good at finishing stuff when it comes to real estate. No, get me off the tools. So I think you like do the first deal, do a little bit of everything, figure out what you like, what you don't like, but then also seriously consider like, am I going to be the type of investor that's going to keep my career and just real estate's going to be a piece of my portfolio? All right, work within that realm. Or are you thinking, hey, I'm actually going to, go balls to the wall and make real estate investing my full-time thing? Okay, then there are other things that you could probably be doing other than just maybe a single family flip every couple of months. So I just wanted to put that in everybody's ear. And I think just for the sake of this video to really summarize it, I want to just cover like real high level, where I see value in Waterloo Region. And if those kind of ideas fit with you, then just narrow down your target one or two types of deals in the different markets you're looking at and just find best deals for those types of deals in the specific areas. As an investor, I sometimes get trapped with chasing different markets that I don't know that well. I like to find the type of deal that makes the most sense for me and find the markets that fit the majority of those types of deals and just go deep on those until I find what I'm looking for. So for here in Waterloo Region, premium locations, like we just took a $200,000 to $300,000 haircut in our market. So yes, interest rates are high. And yes, we didn't talk about interest rates in this video because they will likely control our market for the next 12 months to 24 months. So I'm watching for that. But if you can stomach the interest rate environment right now, prices are $200,000 to $300,000 cheaper than they were 2 years ago. Just think about that in a 5 to 10 to 20-year window. Okay. I like triplex conversions. That's a duplex with an ADU. I like burring small to medium-sized multi-units. Personally, I don't invest in student rentals, but student rentals offer a little bit more cash flow for the acquisition price in exchange for a little bit more management. So if that's the type of investor you want to be, fantastic opportunities in student rentals. Multi-units with land, those purpose-built 3 and 4 unit multis, brick-built, nice fat lots, above 50 frontage, above 110 deep, in midtown or downtown locations, chef's kiss. Great for kind of first, second, or third investment property, I think. And then larger multi-units. If you guys are looking at larger multis, anything around 200K per door and a 5 cap is kind of worth a look right now. If you're finding numbers close to that, whether it's a lower cost per door or a slightly higher cap rate, awesome. I think anything kind of close to those numbers are worth an initial look. But again, please check your numbers, do your due diligence, be really strict on your ARV, ask lots of questions, and work with a professional or work with other investors that have experience with those types of deals. I just think it's really important. Once you start getting to those larger, there's a lot more money on the table. Things move a lot differently than what most people have experience with in real estate. So just make sure you kind of have an idea of what you're going into. But generally speaking, these types of deals, high level, are great value in Waterloo Region. And I wanted to put this up again if people just wanted to pause the video or take a screenshot. If you're doing rental rates, I get lots of questions from people, Adam, on, what can things be rented out for? I just like to give, I've given this slide a couple times. I've updated it over the last year or two that we've been on the channel. But just if you guys have current rental properties and you're wondering what current market rents are, or you're looking to make a new acquisition, use these ranges as a good starting point, or send me a message with the information for the properties you're looking at. No problem sharing my 2 cents on the listings or on what I think you guys can be getting for rent. It all starts at the income when I'm valuing these properties. So I want to give you guys a little clarity on what that is. But with that being said, Adam, I had so much stuff I wanted to cover. I think that this year will be a lot more active than 2023 for buyers, sellers, and investors. I think the general consensus is buyers are optimistic, sellers are waiting for prices to come up, and everybody's waiting to figure out what the heck the Bank of Canada is doing with their interest rates. So I'm waiting just like everybody else. If they're saying, hey, interest rates are coming down, guys, watch out. There's not enough inventory for how hungry buyers and investors are out there. If interest rates are going to go up or they're going to stay steady, sellers are going to be waiting until then prices come back up before they flood the market with listings. Regardless, though, there's not enough inventory. So long term, make some good short-term decisions, hold on for 5, 10, 15 years, and, we can count our money down in Mexico.
Love it, Zach. Well, thank you so much again for giving us this discussion with Kitchener. I know there's a lot of people watching this channel for the first time who are going to come here and get a ton of value out of that. So
hope so.
Thank you, Zach. I appreciate that. And if you are just watching the channel for the first time, make sure you get subscribed. We do all sorts of market updates. We always check in with the numbers as well as with what's actually going on in the city and have these deep dive discussions. So thanks again, Zach from Phipps Brittain Real Estate. Make sure, final note, that you get on his investor hot list, because I think it's one of the more valuable things that you could do for yourself is to put yourself in the flow of deals and at the very least start analyzing these deals so that you can see how you would get into them yourself. So thank you so much for tuning into the Canadian Real Estate Channel. I'm Adam J.D. Martin, your host, and we'll be back with you soon.
Thanks, guys. See ya.